Good morning, good afternoon. How's everyone? We were gone, what, just for a week, right? Yeah, it looks like a long time. Uh, I think we didn't meet last Friday. Yeah, we got so habitual of meeting it every week. Missing a week looks like, oh, it's been so long since we talked about the markets, and me too. So, yeah, but glad to be back. I was traveling the whole last week. Good afternoon, Samasya. Good afternoon. Good morning, Aditya. But good to be back. Good to be back. So, in fact, I was just contemplating because I have to again travel just after the session. So I came back, landed back yesterday afternoon, and then again will be traveling right after the session. And so my wife was asking, "Do you have to do your session?" Uh, I'm like, yeah, because I didn't do it last week. I'm missing it. So I do want to maintain the continuity. So like I'll do the session today, and then we will, after the session we'll get in the car and drive again. So, but good to be back. There was no boot camps last Wednesday. No, there was no boot camp. And even on this Wednesday, there's not gonna be a boot camp. So that's why I've not scheduled anything on the meetup yet. Because again, I'll be traveling today. So pretty slammed in terms of travel for last, I would say, yeah, almost 10 days. So hectic traveling. But after that, we will resume the boot camp from so nothing on 19th. So we'll resume from 26th. All right. So what you guys did in the market while I was gone? Missed Broadcom and Adobe. Yeah, Broadcom, when I came back, I was looking like yesterday night in prep for today's session, and in fact, also today morning. So Broadcom has done, uh, I think, wonderfully. The stock has done great, and also the earnings looks like were good. I didn't look into the earnings, but all I know is that, I mean, they raised, they beat, they raised, and then they also split. So look at Avgo. Wow, what a beautiful chart from 1500 all the way to, it's almost like $200 jump on on Broadcom. I don't know. Is this the next Nvidia everyone is chasing? Oh, I couldn't get into Nvidia. I missed the boat on Nvidia, so now I'm trying to figure out what the next Nvidia is. Is Broadcom the next Nvidia? I know earlier a lot of folks were talking about maybe AMD will be the next Nvidia. AMD hasn't kept up, the same pace with Nvidia. But
Uh, Vivek, I read a comment yesterday that Intel is ahead of the game from AMD as opposed to Nvidia. So what do you think?
so I don't know, we have to see the Intel plans. They have a big plans, but their plans to be translated into numbers.
Number two, you said in the past when I brought up a book I read like 30 years ago that a biotech is the last thing before a recession. So now it looks like people are large companies, not well, I'm sorry, finance companies are investing in biotech. So are we about to have a mild recession?
I have no idea whether we will have recession or not. I think the
Which
market has been waiting for recession since 2023. At the pundits have been waiting for recession since 2023. We are what, 18 months, no recession seen yet.
oh, excuse me, 2021 they said recession, and then for the actually I don't think they're waiting for one now, but I mean, 21 had a lot of talk, but what I'm saying, what I said, and then you said that, people invest in biotech right before a crash because everything else is oversaturated.
Okay, I don't recall talking specifically on this, that the biotech and Crash. So what?
Not crash. I didn't say crash. I said mild recession.
Okay, maybe because I don't know any linkages between biotech and recession coming in, but I don't know. I mean, it's impossible to predict the recessions, and all those who've been trying to do it have been humbled by the market, have been humbled by sometimes how strong the consumer can be. So what we had a PPI, CPIs this week, and then what Fed's meeting this week. I didn't capture the notes. I didn't have that time, but all I got the headlines was looks like the inflation number was better than what we were expecting. Right? It was better than what was yeah, both I guess both the CPI as well as the PPI, which bodes well for Fed to get ready for rate cuts, but I don't think Jerome Powell is giving us any indication for the rate cuts for now. So, so
Hi,
where did
Vivek.
the, hey Maritza, how are you?
Hi, good. So on the topic here of Broadcom that you were mentioning, like, is it the next NVIDIA? So in the previous sessions, you had given us a list of your favorite podcasts, if you recall. And one of them that you mentioned was The Compound and Friends. Well, first of all, that list was amazing. So I listened to Motley Fool almost every day, get
Yeah.
amazing ideas and just great, great insight. And then the Compound and Friends. And recently on the Compound and Friends podcast, they had a guest come on. Her name is Stephanie Link. Have
Oh
you ever
yeah.
heard her? Yeah, so she's amazing, love her. And so she also talks on CNBC. She's a guest speaker all the time on um their lunch power lunch break. Anyway, so you were asking like this, and she gave some good insight. I don't know if you listened to the podcast that she talked down Compound and Friends, but her good insight about Broadcom and how you were saying, is it the next NVIDIA? She says that Broadcom makes chips like NVIDIA, and they're kind of like quote unquote considered second best. They're not as powerful as the NVIDIA chips, but they're really, really good and good enough for a lot of applications and PCs and stuff like that. And so she's heavily invested in Broadcom, and that's the insight she gave about it, that a lot of people, yeah, chips are great, Nvidia chips are great, but sometimes you don't need that super super A plus class. That Broadcom chips, like the next level down, is just good, is just as good for what a lot of people need it for. And so that's why people are heavily going into Broadcom chips, because they're less expensive but pretty good.
Yeah.
So anyways, that's the insight she gave.
No, thank you for sharing it. And my thought process on the Broadcom will be the similar is because NVIDIA chips are so expensive. Number two is NVIDIA chips it's a general purpose um the AI chips. So, and that's why they are so expensive because we don't know what exactly workload the company may be using it for. So if you get NVIDIA chips, so does it better in terms of what kind of LLM models you're running, whether you're running for Llama, whether you're running OpenAI, whether you're running Claude, it will work across all of them because those are general purpose AI accelerators, and hence they are so expensive. But the big consumers or these big giants like Meta, giants like Google, they have a very specific need, specific use case on which they want to run their AI models, right? Then the use case of Meta may be different from what Google has. So if companies like Google and Meta and maybe Apple, I don't know, but if they want to run and if their use case can be served by having a chip which does one task really, really well, and they don't care about other tasks, so those specific application specific tasks or the chips is what Broadcom also makes. So Broadcom is one of the biggest player in something called ASICs, application specific integrated chips. And their biggest customers are actually some of these hyperscalers who are looking to get these AI accelerators for a very particular workload that they want to have. Of course, Google, etc., may be using NVIDIA, but then for specific workloads which are a lot more, I would say, revenue accretive to them, they may want to use those very specific chips from Broadcom rather than going after the general purpose and spending a lot of money on expensive chips from NVIDIA. So I think that's the use case probably behind Broadcom is why you have to use, I mean, general purpose. If I'm a smaller company, if I'm, let's say, not Google, but another business, a healthcare business, or I'm a publishing company, and I need to run models, Broadcom is not going to make chips specific for me. I don't need to, because I don't have a need for millions of chips. But if I'm Google or Apple or Meta, I can go to Broadcom and request them to make chips which are specific for my workload. So I think that's what the probably the use case of Broadcom maybe. But yeah, I am not in the stock, but now this looks interesting to me. Given the fact that NVIDIA chips are so expensive and Broadcom could meet the requirement of these hyperscalers with what they have to offer, and also they are expanding in building the ecosystem of software, etc., along with this, right? So they did a bunch of acquisitions. The latest one is VMware. So maybe they are not just the just the chip company, but probably could be building the overall ecosystem. So that will be my, if I were to invest in Broadcom, that would be my thesis. Maybe I should put this on my watch list. Didn't Broadcom is become also one of what, top 10 SPY or top 10 in the market cap? I don't know. Let's just pull in the top market cap companies and then see what, let's say, market cap. Oh, it's top 15. So it's number 12 now. So if you look at the overall market size, Microsoft, Apple, NVIDIA, and I think between NVIDIA and Apple, we keep on having a musical chair right now. Apple is bigger than NVIDIA. Yeah, Apple is slightly bigger than NVIDIA. Now, of course, that's after WWDC. Then we got two alphabets, Amazon, Meta, TSMC. So this is AI. Apple also went, almost 7% up a week because of AI. NVIDIA, we all know the story. Alphabet is going high because of their Gemini. Meta is AI. TSMC is now all AI. I guess it's only Amazon and Berkshire Hathaway are the two companies which are not coming from the AI tailwind in top 10. I think everyone else is just AI.
I got a question or a comment. If Gemini, AI, and a Copilot, they can't even answer my questions right. How there was a question in the article, how much would you pay for I don't know, whatever, one of these chat GPT? Well, if they can't even get my answer right, why would I want to pay them any money? It's like Microsoft 3.1, Windows 3.1.
Yeah. So you're not wrong. And that's why there are a lot of questions coming around. When will this AI bubble blow up? Because no one is making money in AI except the infrastructure providers, which are NVIDIA's, TSM's, and the like. Yeah, I think these are the only two ones. Or some other companies like SMCI and Vertiv, etc. Those are the only one which are actually making some money, but those who are building or using AI and in their business, we haven't seen the money. I remember seeing some numbers that collectively the spend on AI has been what, $10 billion spent on AI, or maybe $100 billion, and it's only like some of 30 million or maybe 3 billion. A very small is actually the revenue that they have to show for AI, right? And all the revenue is going to one of these big companies. So yeah, I'm with you on the same boat of that. Hey, we are in very early stage, like you said, Microsoft 3.1. We really don't know. It's gonna be a few years before we start to realize the value from AI. And I believe that at least all these models, etc., will become commodity, right? But that's how every I would say new tech will start. We've seen the same case with uh, going back to internet days. Then we saw the same case with um, big data and all that. And now we are seeing the same case with AI. So make hay while the sun shines. That's all we can do. Uh, but yeah, I'm being cautiously optimistic, because to me it looks like everyone is just piling up on some selective stocks. And that's been pushing the markets higher, because the stocks that everyone is piling in on now, we are in June now, which means it's a end of second quarter. So if you are money manager or if you're a fund manager and you don't have some of these winners of the year in your portfolio, you look like foolish, right? So some fund managers might just buy it just because they want to have this on their portfolio, irrespective of whatever the valuation may be. You guys know me. For me, Nvidia has been like overvalued for some time, but now where it's trading at 130. Probably it added more than $1 trillion this year already. But what is that trillion? And at a revenue of what? If you look at total revenue of $80 billion, it's trading at 3 trillion, and an income of $42 billion. I can't wrap my head around this. It's almost same as Apple, which has got revenue of almost $400 billion, 5 times more, and net earnings almost 2.5 times more. But I guess that's how all mania or all bubble starts. I'm not saying that Nvidia is in bubble. They continue to perform and continue, quarter after quarter, but how long can they continue to do that? That's a big question. So no one knows when this air will go out of this AI, but I haven't really seen companies, the end companies actually benefiting from AI just yet. The ROI is calculation is all in papers. We haven't seen it coming in the numbers so far now. I see some comment. Qualcomm is good too. Yeah, Qualcomm has done guys. Again, I don't own that stock. I mean, at the end of the day, you can only own certain number of stocks that you can follow. Broadcom is splitting 10 for 1 on July 15. A monthly dividend is 5.25. Add to Roth, forget it. Yeah. So I was surprised to know that. Okay, let me ask this question. Who is the grandfather of Broadcom? What's the origin of Olmec? So this company was bought. What we call currently as a Broadcom was acquired by another company. And that company which acquired it came out from another company. And that company was spin off another company. So anyone knows about the history? I was really surprised that it's all started with HP. But we don't talk about HP anymore. HP is like, it's a old tech. Doesn't, it used to be companies like HP, IBM used to be bellwether for IT. Not anymore, but it was HP which had spun off a unit into Agilent Technologies, which Agilent still exist as a separate company. And then I think the semiconductor part of Agilent was spun off into separate company called Avago. That was started traded on the stock exchange at AVGO. That's where the ticker comes from. And then because Avago was focused on semiconductor, they bought a company called Broadcom, but they retained their own ticker, but the Broadcom branding was, I guess, better and stronger. So they changed their company name to Broadcom, but retained their old ticker of Avago. That's why it's we see name Broadcom, but ticker as AVGO. It's all started from HP. So yeah, fascinating story. And now the HP is two companies, but I guess this all spin off, etc., happened long before HP itself split into two companies. Yeah. What else? Is it right time to buy Broadcom and Nvidia? Nvidia, I mean, I'm not buying any more Nvidia. Whatever I have, I'm not selling it, but I'm not buying any more Nvidia. I mean, I can't justify the price at which Nvidia is trading. But that doesn't mean the price may not go higher. I mean, the last when I sold my last lot on Nvidia at close to 700, and that was like enough for me. Oh, gosh, it's already a 700. How do I justify this? Now what they are sitting at almost 1300, like pre-split. So, but so I don't know how long. What's your time horizon? What do you want to invest in for how long? How big is the position size? I guess that all you need to look in when you make a decision on investing in any stock. Forget Nvidia. So there is no, I guess there is no one straight answer for anyone. If you have no position in Nvidia and want to invest like say 0.5% for a ride, yeah, I mean, if it goes down, it's only 0.5%, right? So and then yeah, you could. In that case, I'm not buying or putting any more in Nvidia. I can't justify where it is trading right now. I guess long term, we might find better opportunities later. So when everyone stops talking about Nvidia, that will be the right time to invest in Nvidia. Today, everyone's attention is focused on Nvidia, AI, generative AI, LLMs, and all that. That's the time when I would rather, me personally, I would like to step aside and watch it from the sidelines. So, all right. Okay, good start. So, I guess we can get started today. Again, I want to repeat no Wednesday session on options bootcamp because I'm traveling again today. So, but we will resume, but we will meet on the next Saturday and we will resume the bootcamp from next Wednesday. So keep an eye on Meetup. If it is on Meetup, we are meeting. All right, so today I want to talk a little bit about WWDC and and Tesla, because Tesla had its shareholder meeting, and of course the shareholder voting on a couple of proposals. I guess two proposals were most important. We'll talk about that. And Apple, look at the performance for Apple, and we'll see, what happened to the market. Apple is not like a GameStop. It's not a small cap company. This is the second most valuable company in the world, and it's making a move that we don't see, like such a huge market cap companies making these, such a high moves. So it was what, almost 190 to all the way to 220. So almost 7% move in a week is a big move for a company of a size of Apple. So Apple had this WWDC. We'll go through some of the things that they have revealed in WWDC, and I guess those are the two main topics. Sorry, I've been traveling the whole week, so didn't spend a lot of time on markets. What else you want to talk about? Maybe we can have a lot more discussion. Okay. All right, so let's dive into this. Overall, as you can see in the chart, except the IT and the software, communication software related stuff, most of the market is on red. Like majority of is on red. So I still feel that the breadth of the market is shrinking, and it's being driven by some of these biggest. Nvidia is up like 10% for a week. Okay. How much is it up for the year, YTD? NVDA. It's up almost 175% year to date. And this is on top of what, 200% plus up in 2023. So huge, huge. It's all because of AI. So gotta be careful. AI will be real, but I don't know if these prices on all these stocks will continue to hold. I think that's a bigger question. What else? Apple was up almost 8% for the year. Microsoft, I guess those are the main ones. Otherwise, energy really in red. Industrials had really a bad week. Financials had a bad week. Basic materials, I would say neutral. Utility is not that great. Consumer defensive stocks, not really defensive, except couple of, I think, the Costco and Walmart. And I can't wrap my head around what the current price at which Costco is trading. I know they got a great business model, but at the end of the day, it's a staples company. And what, paying 50 times the earnings on a staples? Don't know how do you justify that. So yeah, almost, even current PE is 53. Even if you look for a forward PE, it's like 48, 49. Don't know who is buying these Costco's. So I'll be careful. I mean, some of these valuations have gone way beyond reasonable. And Roaring Kitty was back. I guess he did his live stream after 3 years. Did anyone of you get to watch that? Anyone watch his live stream? Guess it was probably nothing burger, because I mean GME didn't move. Where is GME? I didn't pay attention. Where is GME? What impact did it have? Okay, yeah, then almost nothing burger. And I think I saw a tweet that he really didn't uh, keep all. I think he sold most of his options and then converted some options into stock. And now Keith Gill, he owns almost the same percent of stock as much as the CEO owns. So go figure what they have to do. But this company now has got almost $5 billion in cash. I think this is the only company which the stock will go high the moment company announces additional secondary offering. So well, go figure. I don't know how long this craziness can continue, but I guess there are a lot of people in the market looking to make a quick buck. And yeah, those who may have missed the bull run in the market is now trying to figure out, any way to just compensate for it. The business has been performing really, really bad. I guess maybe it was a day before or 2 days before, or maybe on the same day of the live stream. GME also reported its results. Who care about the results anyway? And the stock was up maybe 25-30%, even though the results, like business was bad, sales were down, earnings are down. But I guess this has just become a meme stock. So uh, $24 million income and $10 billion market cap. But never underestimate the price, the power of cash. So now they got what, 5 billion cash. Don't short it. Don't short the stock. When the company has 5 billion and and the force of, I says, Wall Street back behind it. So I don't want to short it, but I don't want to play this either. I see a comment. Yeah, good. Got better things to do than to watch him. So yeah, I guess I don't know. Maybe does it still have his own the prior charisma, or maybe it's died down. Uh, People no longer as much interested in because GME didn't move. So hopefully, someday we will see this craziness, um, dissipate in the market. uh, at least I'm thankful that it's in limited to these a few stocks, GMs, GME, AMC. 2021 was crazy. Looking at the overall sector performance, yeah, S&P is up almost what, 14%. Can't complain, man. Can't complain. This is, we are not even halfway through. So 2023 S&P was up almost 27%, and now we are close to halfway, and we are up almost half of that. So if this continues, that means S&P will maybe up almost 30% for the year. I'm not saying that's what will happen. Nobody can predict it, but that's the reason why we should not get out of the market, I guess. If after 26% last year, if you thought, gosh, yeah, the interest rate is still so high, the inflation is still higher, and how much can this market go? There we go. We are up another 14%. So that's why sitting out on a cash is the worst thing that we can do. Glad that we didn't cash out. All we can do is, hey, just continue to do a dollar cost averaging into SPY. That's all. 95, or I would say 99% of the retail investors, as a retail investor, we should do. That's the best strategy. Fear and greed index. So this is, I was a little surprised on this one, given the fact that market, closed at almost 14% high. We close to what? SPY is how? So it's, I guess this 544, maybe it's all-time high. Or was it 550? What's SPY's all-time high? Let me go back and look at for 3 years. No, so 544. Yeah, seems to be its all-time high, and it's like pretty close to all-time high. And fear and greed index like trading at 38. This is what we wouldn't expect. So when I was trying to get this picture, I thought maybe we are actually in greed phase. Because again, I wasn't looking at the market. I really didn't know what happened, over the last week, on in terms of everyday basis. But when I looked at that, the market closed at whatever 542, I thought that's pretty high. So we must be close to greed phase. And then today morning, when I was trying to get this picture out, I'm like, at fear, that is a little surprising. Right? So only one thing which I can think about it is maybe this market is driven by some of these very smaller segments, uh, limited number of companies like Nvidia's and things like that, and the the majority of the others in S&P 500 are not performing or are underperforming, and investors are a little worried about those. How about overall PE ratio? I don't know at what PE is S&P trading. Let's look at SPY. Probably 23, 24, I guess. Okay, so let's cash, not cash. Okay. So you got this is S&P PE ratio 28. Current is 28. 28, which is high. This is like you can get better yield on treasuries than this. So what did I buy or sell? Nothing. No stupid decisions. I wasn't watching it, so no buying and selling for this, for me at least. Anyone of you bought or sold anything? Want to share? What did you guys buy or sell this week? Anything to share? So Aditya, was there a specific question behind the question on you wanted to know the overall PE?
No, I was just curious, because I think everything just seems to be going up in a crazy way, especially the Apples and the Nvidias and the overall market. And you just showed the fear versus greed index. So yeah, I was just trying to think in PE terms, if that fear doesn't feel right to me. But yeah, I was thinking if I'm double checking my own thinking there.
Yeah, Rohit. So yeah, I'm being, like I said, I've been a little cautious and around and having my hedges, but yeah, market has been surprising me as well. Rajiv says sold Adobe after earnings by holding for a while. What did Adobe report in earnings and what did the stock do? ADPP. That's a nice jump after earnings. And I know the stock was beaten almost 15% up post earnings. What did they report? ADPP earnings. So, Reggie, do you know what caused this Uh, okay, let's go and see what got market excited about Adobe. Record revenue in Q2, 5.31 billion driven by Creative Cloud. 10%, but that's a 10% year-over-year growth. Cash flow is $1.94 billion. GAAP operating income is 1.89. 4.6 million share repurchase. Maybe it's a guidance which was better than expected. So they're guiding to 21.4 to $21.5 billion of 2024 revenue. Maybe that they must have done better than what the market was expecting, probably because 10% growth is not that spectacular. They seemed oversold or not having much AI story to share. What happened to their overall Firefly? Again, these are the stuff that you realize the companies, those are building products using AI, haven't really shown the benefit of AI in their numbers. Right? So again, I don't own Adobe, I didn't follow the earnings, etc. I don't know how much revenue, how much difference is Firefly making to Adobe's numbers. But yeah, the stock has been beaten down a lot. So maybe a little bit of positive news, some short covering, who knows? But and you mentioned you also sold Adobe. Hopefully, were you able to recover your cost basis, or you're like, okay, I'm done with this stock? Okay, done with it. All right. I say Ramesh is good. No, Adobe has still a lot more to go. Yeah. I've never owned the stocks. I don't have any specific investing thesis on Adobe. But I mean, either you, and I respect whatever your judgment is. But yeah, if you don't want to own the stock anymore, yeah, selling is the right answer. But if you are still bullish but want to hedge, you could have sold, maybe covered calls against it and reduced your cost basis. Anyway, so before we jump into the Apple WWDC, few things around the EQ mindset for investing, which I believe is way more important than IQ. I think maybe I've gone through this earlier, maybe last year or something, but repetition never harms, especially when it comes to EQ. When investing, be a farmer. Right? Don't shout at your crops because they're not growing fast enough. Gosh, Nvidia is going to the tree is going to the moon. Why is my stock not growing? Right? Come on, grow up. I want you to deliver the fruits to next week. Don't do that. Don't blame crops for not growing fast enough. Talked about it. Don't uproot the crops before they had a chance to grow. And I've been guilty of doing this, right? More often than holding the stocks that have gone to zero. I've been guilty of selling the stocks maybe earlier than I should have sold. So over the last few years, and I have changed my own investing style, that if I really like the stock, and unless it is egregiously priced, I'm just going to hold it. Hold it forever, unless I find out, number one, either the pricing has become way beyond where I can justify, or I just don't like the business. The business has pivoted, and I don't like the business. I mean, all those reasons that I've shared earlier, the reasons to sell the stock. Now I'm trying to follow that. Uh, but yeah, and if that means if the business still doing good, but the stock hasn't performed for a few years, I'm still okay holding it. Let's give the business a chance to prove itself, as long as it is still moving in the right direction. Directionally, if it is moving in correctly, a stock price will take care of it itself. It just will need a lot more time to grow up. Choose the best plants for the soil. That means pick up the stocks. If you want to invest in individual stock, pick up the right stocks. Don't pick up the stocks because you heard it on YouTube or on a meetup or on Twitter, or you heard it because in a party. I guess those are the stocks that we should stay away from. The one which someone will bring up in because you met up on a drink party, or some friend of yours who has never invested earlier, but it is now coming and talking about a particular stock. I remember it, I think it's 2021. We just went, yeah, it was 2021. And we were like back in office after COVID, start to meet in person. And then some of my colleagues they were talking highly about Tesla. And Tesla, you should invest in Tesla. It's doing great. I'm like, I like the overall vision of Tesla. I just can't justify the valuation of Tesla at that point of a time, right? Again, those are some of the most talked stocks in the parties. Are That's the time when we gotta be a little more cautious about, should I get into it right now when everyone is talking about it? Then obviously you're not gonna get the best pricing. Right? The stock has already been bid up higher.
Excuse me. Why does the third richest man need $54 billion when he's distracted?
So my only one answer would be, we made an agreement. He delivered on his part. Then as a shareholder, we should deliver on our part. I mean, 2018. So so let's talk about that now itself, right? So in 2018, shareholder ratified the proposal that if the richest person, if Elon Musk will grow the company market value, will grow the value of my shares by 10x, not 10%, but by 10x, then he'll be awarded 10% of the value of the company, right? And if he doesn't do that, he's gonna get paid zero. So, right, no question. And everyone laughed especially when I say everyone, the financial media, CNBCs or the pundits, they all laughed at saying, why would any CEO would ever accept this? Because this is like, it's a task which is impossible to achieve, seemingly impossible to achieve. And let's say, even if you fall short, let's say if you've done 80% of it, you still get paid zero. I don't like Elon as a I would say as a CEO of running huge public companies, but he took up that challenge and he delivered, guys. And as a shareholder, then we should not question why he's making $50 billion.
But what has Elon done? We know he bitches on Twitter all the time. We don't know he's doing anything for Tesla.
He is a CEO. If the Tesla has not performed, everyone who is saying why Elon should get a credit would be out there to blame me. As a CEO, he gets all the blame. He should get all the credit. So I am, irrespective of my personal opinion on Elon, I think as a shareholder, we should keep our side of the bargain. And which is what? I think the shareholders ratified it again. It was the I mean, I found it so disgusting that some of the big money managers, including CalPERS, they smelled an opportunity to kind of screw him and say, hey, we promised you, but now a Delaware judge has called it illegal. I don't know why the Delaware judge has to intervene in a company's affair when the shareholders have already ratified it. That's a topic for another day. Yeah, but in any case, those who had approved it earlier, now they say, you know what? Oh no, we don't want to pay him that amount. Come on, man. Keep a gentleman's promise. You made a promise to a CEO. He kept his side of the bargain, then we should keep our side of the bargain, irrespective of whatever antics he does, which I don't like, what he does on Twitter, which I don't like. But as a CEO, he delivered his, and I guess as a shareholder of many other companies, I would like to see other CEOs coming up to the challenge and say, I will, I will take up the challenge of increasing the shareholder value by 10x in next 5 years. Yeah. And then you get to enjoy, 5-10% of the increase in value. I'll be happy to give it to them. So I am, and I voted in favor of it. I didn't, so of the shareholder proposals, the one other proposal was, reappointing Kimball Musk and another director. I voted against it, but I voted in favor of paying Elon what is due to him. There are other proposals where I voted against the board recommendations, but for paying for the performance to Elon, I voted for him. I mean, yeah, it's reneging on a promise is something that I don't want to do. And that's like taking advantage, undue advantage because an opportunity opened up. It doesn't work. I mean, this kind of any money that you earned through this is not gonna be stay with you for longer. So I'm happy that he got what was due to him.
Vivek,
Yeah.
I'm glad you talk about integrity, because you're talking about your integrity to the contract, which I agree with you.
Mhm.
But do you know how much I get screwed in the San Francisco, San Mateo counties? I maintain my side of the bargain, but other people screw me all the time.
Yeah, so I don't want to get to the level of, I mean, if someone, I don't need to stoop to the level of other people to get even with them. I mean, to get even with Elon. Yeah, Elon has done no harm to me. I mean, I wasn't even a shareholder then. So, but in any case, I'm of opinion that if you made a promise, the other guy delivered, you should do your own part. And don't try to take an advantage of the other guy even if an opportunity has opened up. That's my opinion, and just for that reason I voted in favor for Elon's pay packet. Next one, irrigate and fertilize your investments. Keep an eye on investments, see what they're doing week after week. Do you need to add more to it? There are two thoughts. Some would say, double down, some would say add up. But that means you need to watch your investment, especially if you are investing in individual stocks, right? Remove weeds and water the flowers. This is one area where I still have to improve. As a human being, we generally will sell the winners because it feels good to take profits. It helps our, the chemistry in the brain. It helps us make us feel good to uh, emerge as a winner. And taking a loss is a lot more painful than the joy of gain. So we always avoid to take loss. and we end up doing the reverse of this, which is we cut down the flowers. Hey, it went high. The business is still really good. It's performing. I'll just take some profits because it feels good. And the companies that are not, the stocks that are not performing, I'm not saying that you should sell the stocks that are not performing, but if the business is not performing, we still try to hold it in the hope that something will work out because it is too painful to take a loss. Scientific studies have shown that the pain of taking a loss is, I think, twice or thrice the joy of the gain. So hence we try to avoid the pain, or we try to avoid to realize the loss. But what we should do is the reverse. If we are holding some of the companies wherein the business is deteriorating, don't just hold the stocks because feel bad to take a loss, right? Water your flowers and remove the weeds. I guess there was another study, and I don't have the reference, which was talking about you will invest only on the stocks that have hit a new 52-week or a new all-time highs. How difficult it would be. And even if you've done that, your portfolio would have done great. But how difficult, imagine how difficult it becomes for us to invest in a stock when it is hitting a new all-time high. But there are reasons why the stock is hitting new all-time high, because the business is doing great. Remember, you will have a good seasons and bad seasons. You can't control the weather. Only be prepared for it. And be prepared for it in a way that if the bad season continue longer than expected, uh, your portfolio is not right. Your crop is not right. We can always build a portfolio which will do great if the market cooperates. Right? But if it doesn't, I mean, you can always lever up your portfolio and can post twice the market returns because of the leverage. But if the market doesn't go in your favor, you kind of get fracked. And we can't control where the market or an individual stock will go. Only thing we can do is to build our portfolio in a way that I'm prepared for any eventuality. If irrespective of wherever the market goes. And I think I also spoke earlier. Right now, I'm just focused on building. I'm not focused on getting the maximum returns, which as an investor may not be you may not be accustomed to hear this. Someone saying, I'm not focused on getting the most returns. For me, I'm now focused on building the most resilient portfolio so that irrespective of where the market goes, I don't have to sell the shares that I'm owning in my portfolio. So I underperform S&P, fine. I'm happy with that. As long as S&P crashed 20% next year, I'm still invested. I don't have to take any drastic step of selling some of my winners because now I need to put food on table and I have to sell shares to do it. That's what. If that means for me to hold a good amount of a cash, I'm willing to hold that cash so that I don't have to sell my shares. So when you ask me, oh, did you beat S&P this year? I'm like, that's probably not even a right question. But did I beat? Probably yes, but that's not what I was focused on. I beat S&P because maybe I turned out to be lucky. I was probably holding some of the stocks that have done better than the S&P, and hence I beat S&P. But I'm focused on making sure that even if the market goes against us, I still continue to, I will still be invested in holding the great companies that I want to hold. If I have to sacrifice 200 300 basis points in any given year, it should be fine. What are the useful tools you use? I don't use any tools. I mean, I know at the end of a month what's my net liquid positions on across all my accounts. That's all I need to know. Once you know,
So do you kind of just do it in Excel? I was wondering because it gets a bit harder if you've got investments in India and then different countries and US and
yeah. No, so I don't do anything in India. So my all is US.
right.
So, but I know at the end, so what I do, like, I don't try to focus or optimize month by month. But at the end of a month, I just look at, okay, what's my end of account value across all my accounts? And then, it's a plain Excel, which will tell me, okay, what's my,
Yeah.
the performance till date.
Okay. Okay. So you almost just have a monthly ritual. You go through your Thinkorswim and XYZ platforms, create your own Excel.
Yeah.
Yeah.
The glad thing, I don't have a 20 accounts. So it's only 3 or 4 accounts that matter for me.
Yeah.
Which becomes much easier.
Yeah.
So yeah. So that's all I do. All right, so let's get into. Oh, so we already talked about this. This was around Broadcom. Is this the next NVIDIA? So we started our discussion with that. So I'll skip that. Other topic I want to talk about. Have you seen the worst in software SaaS? So if you recall, I think it was 2 weeks ago, we looked at the performance or the stock performance and the business performance of these companies, Snowflake, MongoDB, Salesforce, Dell, they all got beaten up. The stock was beaten up after their earnings. And it was that time, I think that the topic of the discussion 2 weeks ago was SaaS meltdown, right? So it really looked like that a lot of these SaaS companies were deep in a bloodbath. But last May, there were only 3. If you look at last May, there were only 3 software companies. When I say last May, means 2023, which were trading on 10 times the 12-month revenue. Today, which means 2024, those companies are number 10 companies are trading. 2023 May, the median multiple for highest multiple software companies was 10.1. Today, it is 16x. Last May, the median software multiple was 5x. Today, it is 5.2. So today feels like a bloodbath in software, and it is. But the sentiment was worse 12 months ago. So 2023 was, the May 2023 was even worse than what we are seeing in SaaS software today. The most expensive companies still have a room to drop if you're going back to May 2023. Right? And similar relation to that, I think it was after Salesforce or something, there was a one tweet and that had a link. It had a link to a Google Doc, right? Of all places, it was just a Google Doc. And the reason this, I mean, it got like maybe 3 or 4 million views, and including the comments from many of the VCs and the CEOs. The topic was the end of software. It's just a one-pager Google Docs. If anyone is interested, I'll just post this here. You can go and, but I mean, anyway, I'm going to read it. It is basically comparing the internet, what the internet done to the media companies, and then what these LLMs could do to these software companies. And I think this came right after maybe Salesforce earnings. So to understand how software will change, we can benefit from studying how tech had changed other industries. History tends to rhyme if you listen. Before the internet, media behaved very differently. It was expensive to create. You had to pay people to make content, to edit it, to distribute it. Because the content was expensive, it had to make money. And consumers paid. Newspapers, magazines, book cable, pay-per-view, etc., etc. Warren Buffett, that's why he owned newspapers, because it's a subscription business. When the internet happened, media companies viewed it as a way to reach broader audiences and reduce their distribution cost. But no one saw coming was the internet not only reduced the distribution cost, but also drove the cost of creating content to zero. User-generated content flourished, and when content doesn't cost anything to create, it no longer has to make money. So how does the content behave when it no longer has to make money? The relaxation of this economic constraint led to a Cambrian explosion. You can take a picture of a cup of coffee, post it to 1 million views, or maybe none at all, and the market clearing price is still met. I mean, even if you have a zero distribution, you still, I mean, from an economics perspective, still doesn't matter. Right? This produced a deluge of content that none of us could reasonably consume. This necessitated the products to direct attention, merchandise this content, route us effectively. We understand these now as user-generated content platforms. These platforms completely T-boned media companies. As a media company, you were competing for the same attention of the same users, but with strictly higher cost of goods sold. The more people you had on your payroll that were creating content, the more exposed you were being flanked by these user-generated content platforms. You know, these user-generated content platforms are like Twitter and Facebooks and the Reddits of the world. Structurally, investing in media has been a losing value proposition ever since, and value creation has shifted from to the platforms that control the distribution, not really the content creation, because now the users can generate the content. Now trying the same analogy on software. Software is expensive to create. We need software engineers to create the software. You have to pay people to create it, maintain it, and then to distribute it. Because it is expensive to create, it has to make money. And hence, we as a customer slash consumers, slash companies pay for it. Software licenses, SaaS, per seat pricing, etc., etc. Software margins have historically been architectural envy, 90% plus gross margins and zero marginal cost of distribution. Right? It's a SaaS, doesn't cost anything to distribute. Any incremental cost to distribute, marginal cost to distribute. Software is expensive because developers are expensive. They are skilled translators. They translate human language into computer language and vice versa. Now comes the new stuff. LLMs have proven themselves to be remarkably efficient at this and will drive the cost of creating software to zero. And so I think, I don't think if I agree with zero, but will it drive the cost of software? It's actually driving the cost of software already. Now you have a startups that don't need to raise $10 million because they want to get, initial product, the initial POCs out or get to a product market fit, because they have to hire at least 10 engineers to build a demo. Now they can do with 1 or 2 engineers, assisted by LLMs, assisted by ChatGPT, or assisted by Copilot. Right? This is already happening today. Right? Or you don't need 5 senior developers. You need 1 developer in, or maybe 1 intern using GPT 4.0. And I read one tweet, I think it was last week or a week before, wherein one of a software contractor quoted $20,000 for a job, and then an intern did the same job using ChatGPT 4.0 and stitching together various outputs using Replit, and he did it in 2 days. Right? So the cost of creating software is coming down already. So what happens when the software no longer has to make money? We will experience a Cambrian explosion of software the same way it did with the content. Vogue wasn't replaced by another fashion media company. It was replaced by 10,000 influencers. Salesforce will not be replaced by another monolithic CRM. It will be replaced by constellation of things that dynamically serve the same intent and the pain points. Software companies will be replaced the same way media companies were, giving rise to a new set of platforms that control the distribution, probably distribution of these various AI models. SaaS, ARR, magic numbers, these are all shorthand to understand the old model of business building in software. One where the expense associated with software was actually your moat. When an expense associated with software is actually a moat. Today, this is more prevalent than any other time. Why some of these big companies cannot be, they are becoming bigger because the cost of creating what, let's say, a new Facebook is so expensive, or cost of creating a new search engine is so expensive that it serves as a moat. The invisible hand has been stayed in the software for a long time, but LLMs will usher in its swift, familiar corrective force. Majoring in computer science today will make like majoring journalism in 90s. I don't know if I agree to it completely, but it will, the jobs in the software will shift. We may not need the same number of, let's say, Python developers or pick any database technologies, but the jobs may shift to the ones who can create these models. But will the cost of software is going down? I completely agree to this. But is this the end of software? I don't think I agree to at that level or at that degree. But this was a little thought-provoking article, and I think rightly it got the attention from many CEOs and the VCs. But I don't follow this person, but the only reason why I got to know this, saw this article was it was appearing in feeds of some of the VCs that I follow. I'm like, what are they talking about? Right? The end of software. I thought it's software is the only, uh, you know, a reliable business of making money. We looked at the S&P 500. Most of the of all 12, most of the companies are software companies, tech companies. But it's an interesting read to see all these individual software providers. Could they be replaced by a set of software modules and with an AI agents that can stitch together those modules along with us? And we don't have to get a monolithic software from, let's say, Salesforce or from SAP, etc. Possible? Here, the author is envisioning a use case wherein developers are creating and open sourcing their models onto a marketplace. Maybe they'll get paid by advertising or whatever, but the cost of creating and getting access to those software modules is almost zero. And then I can use AI agents to actually operate and stitch together those modules to create what I need. That's a scenario that is being envisioned in this. Now you can build, come to your own conclusion of how far we are. Maybe this is 20 years down the line, possible, or is it 5 years down the line? I think that's a difficult stuff to know. And even if it is possible that you can entirely build your software by using off-the-shelf open source modules stitched together and created the whatever software stack you need by using LLMs. Our let's say the big business house is going to do that. Will they be okay using everything open source? That's another question. But Nonetheless, I found it really interesting, a different way to think about how LLMs could disrupt the business of software creation, just like internet had disrupted the business of content creation. So ever since I got active on Twitter, I don't go to wallstreetjournal.com anymore. I mean, I actually see things appearing on Twitter feed sooner than it appears on Bloomberg. I still have subscription to Bloomberg, but it appears on my Twitter feed before it actually shows up on Bloomberg. So you call it as a citizen journalism or whatever. It is much faster than what a traditional single monolithic company as efficient and as big as Bloomberg could do when it comes to the business. So it's an interesting thought. Something to think about. Right?
Can you
And-
close the website if it
Sorry?
works for you?
Sorry, say that again. So was there a question? Okay. Yeah, but I don't think I'm gonna tell my, I don't know, my daughter wants to major in computer science anyway, but if she was, I'm not gonna tell her to switch to, not do that. So I don't agree with this just yet, but I think it's directionally, this article is right. All right, let's look at what happened in WWDC, or do you have any other question? Anyone wants to share your own thoughts around this? Is this the end of software? Is this the end of monolithic software companies?
Hi, Vivek. So one thing that caught my eyes about the story you told was I was listening in the background. Was that the article in here about the intern that did the job for less than the money that the software person had quoted at 20,000?
No, these are completely two different stuff.
Right. That was something you heard separately. So
Yeah.
My point is that I bet that intern who did it was probably a computer science student. You know what I mean?
Yeah.
Because if they're not a computer science student, they wouldn't know how to piece together those pieces, is what I'm thinking. So I'm going to assume that that intern was a computer science person. Now, because right now they're the ones that are able to kind of figure out how to piece it together, even though they're not full on software developers yet. But I think in the early times, the computer scientists will be the ones to leverage it. But then maybe later, not more functional or business people will figure out how to do it. But anyway, that was just my observation, is that intern was probably a student of computer science.
Yeah, I'm sure. And I think it's not the computer science is going to go away. The whole idea is the need of the number of these computer science graduates will be less than what we may have today, because you wouldn't need 5 software developers. You probably will need just one and a great set of access to these great tools. And that is already happening in smaller software startups. Right? Today, if you want to start a startup and go on and tell to VC that I need to raise $10 million because I have to hire 10% or 15% software development team, I don't think anyone is going to fund us today. They say, you look stupid. All you need is 1 or 2 people to create your POC and access to these tools. No one is going to fund it. So I guess that's a challenge that you may not have earlier, where we had like big software development teams. Now you have a much smaller software development team, but with access to these great tools. And the folks that can create those new tools, they will be in demand, so that the jobs would have changed. right? Rather than me trying to, every time trying to write, how should I put it? The basic functionality, I could get that from, or I could get that, or create a model of that, and have it release it in open source. So those people will still be in demand. But I guess those who were on a general programming, the demand of those folks will be lesser than what it used to be. Rajesh say, I don't think it reduces value of quality in software engineering workforce, just the quantity. Yes, it's the quantity. So I guess that's what it mostly. It was. I mean, I found this article a good read. It's a way to think what might happen in future, what LLMs can do.
It's also interesting what'll happen from an immigration perspective, right? Because I work in tech in Silicon Valley all my career, and the entire everybody in India is studying for software development to get their H1s to come here because we were short software developers. So I wonder if like the country of India will start to change their focus to be able to target whatever we're needing, if it won't be software developers. Just the implications across the board from an immigration perspective as well for H1s and stuff.
Yeah. So I guess those who major in computers are smart enough to pivot, so they'll pivot to something else. So we had a lot of what in 2000 everyone wanted to be Java developer, and then later on we pivoted to something else. So the tech changed. So I guess now, those folks will pivot and move to a different tech. I guess the tech will still stay the same, probably not what we see it today. But I guess that'll still maybe a decade or 2 decades once this scenario becomes real. So I'm not worried about, in immediate future. Same was said about computers, robots, productivity improves, new job opportunities will come up. Yeah, you have to be always open to learn new things. Apple AI. Let's talk about Apple AI. So this AI is actually not AI as we know it. It's not artificial intelligence. It's Apple intelligence, or it's not generative AI. So Apple doesn't want to call it as a generative AI. They call it Apple intelligence. So they had a WWDC, and what I read was that generally WWDC is not an exciting event. Folks pay more attention to Apple product release events than the WWDC, which is more developer focused, right? What Apple has to talk, market generally want to focus on which new iPhones is Apple going to release, what's new iPad or Mac, what versions, then what are they going to do for new software capabilities. But this year WWDC had generated lot more interest because market wanted to hear AI. We haven't heard a story of AI from Apple. Apple was the only company that had never showed its cards around AI. Of course, Meta talked about Llama. Microsoft talked about Copilot. I've been talking about Copilot. Microsoft made an acquisition of OpenAI. And then we'll turn towards, hey Google, what you guys are doing? And then Google started talking about their Gemini, right? It was called something different earlier. And then we're looking at Amazon, what you guys are doing. Amazon started talking about Amazon Bedrock in their earnings call. And then we're like, Apple, what are you doing? Apple, they have never told anything around AI in their conference call. So there's a lot of market expectations was in this WWDC. Apple is going to reveal, what is that they're going to do around AI. So Apple didn't disappoint. They came back and talked about their AI. So this is really interesting. So Apple, I think we, of course, before WWDC, the news was out that Apple had partnered with OpenAI. And so now they are partnered with OpenAI to integrate OpenAI in Siri. So I guess Apple had the oldest, or the first version of the LLMs in Siri, but that really has never worked well. Right? So Apple kind of lost the lead, and everyone used to wonder, when are they going to fix Siri? When are they going to fix Siri? Maybe this will actually fix Siri. So Apple will right now has partnered with OpenAI, and you will be able to do a lot of tasks on your own phone. We'll go through some of the new things that Apple is going to do. But it is also open to bring up other partners. So they are still discussing with Gemini. If you know anything of Apple, they're not an easy customer. They're gonna drive, they're gonna bargain hard with both OpenAI and Gemini. I don't think they are paying anything to OpenAI for this, but we don't know if the OpenAI is paying anything to Apple yet, but I won't be surprised if they are. But in any case, so the Siri AI will become a glue between the different apps. So the idea will be at you have your Apple phone, you have your iPhone, and I'm just throwing an example of it. You ask Siri to tell me which is the best restaurant with this, dietary restrictions I have, and open between this and this time. And, and then based on your preferences, Siri will not only find you the food that you want to eat, and also ask Siri to have it do dashed to you or Ubered to you, because you have an account with one of those and you have those apps on your Apple phone. So Siri will not only tell you, but it will also do the subsequent steps of getting the food over to you.
Vivek, they already have that in China a long time ago. WeChat, they have that's what Elon Musk wants for Twitter to be, but probably can't do it. But the thing is, what they have in China is from farm to house.
Farm to table. Yeah, farm to
Yeah.
house. Yeah.
Yeah, but so I mean, yeah. So I was trying to figure out this week what my 2021 computer and the difference in what they told me was this is software and that was hardware.
Mhm.
But
So
yeah.
little different this going to be is that probably in currently what it exists, you need to know what you really want. But now what with this will be, you really don't have an answer to what you need. So first they will find an answer, then the Siri will do the other part of what you want to do with an answer. Let's take another example. Right? Hey Siri, can you look at I need to know what Adobe had reported in their latest results, summarize it in bullet points for me. Also add a revenue growth, EPS growth, and free cash flow growth graphs. Once the report is ready, email it to this email address, CC it to my boss, and send me a text notification that it is done. Sorry, I don't understand. Oh, geez, my phone wasn't here with me. So it just spoke up. Sorry, I don't understand. So today my phone was on my desk and all Siri says, sorry, I don't understand. But if Apple opens up, and I think Apple did reveal that some of these actions between the apps, Siri could get access to those. If that happens, this may not be too far away. Today, maybe we can ask ChatGPT 4.0 to give me, based on this prompt, to generate the report for me. Of course, they are hallucinating and all that. We'll fix this, right? It will take time to fix it. But I don't think that this scenario is too far-fetched when a device which knows you and you have all the apps and they can just integrate it. Another example, right? Now look at Apple, they know a lot more about you. You have all your photos, everything, you have your text messages, you have your photos and everything on your device. I can ask Siri to, hey, okay, I'll keep my phone away. Hey Siri, pick up my daughter's birthday photograph of her, 8th birthday, 10th birthday, 12th birthday, because her 18th is coming up. I want to create a collage, pick up these photos, and then create a poster for it. And if I have my Walgreens app, can I also ask you to schedule and send it to a print. So that will be really when as a consumer, I'll start to love these AI, the real Gen AI. And I think that's where Apple may be going with this. And that will be a huge, huge, huge opportunity. So are there some concerns on privacy? Because Apple is generally very big on privacy. I did read, I think on Twitter, someone like, hey, now you're giving your data, access to your data to other, like to OpenAI or to other apps. Doesn't it invade user privacy? But I guess in this case, I think Siri will actually ask you, hey, do you want to share this data with Uber? And if you only say yes, then it will do the next steps. Or maybe you grant it a permission once and then it'll remember it. But this is where the world may be moving to. And if that's the case, and Apple is successful with this one, I mean, even though Apple may be late, but I guess better late and then better be right. This is the use case which I can get behind. It really helps consumers. And if, again, this is if, right? Nothing is right now. We don't even have a demo that Apple can show to it. This is, hey, it will come after however many months, right? And if Apple is saying that this will be available only in the OS that could be supported only on iPhone 16 and above, boom. I don't see any reason of not upgrading to iPhone 16 if I can get this kind of an ability on my phone. And then, right, what, 2.5 billion Apple devices? If those 2.5 billion Apple devices are up for renewals, you can't, I mean, yeah. That's a big opportunity on Apple. That will be a huge opportunity for Apple. Now we'll see, how much of the scenario that I described could actually turn into reality. That's we have to see. So anyway, so that's which is like AI on your device. It understands you, it understands your data. It can look through, let's say, your text messages. Because Apple knows all that. It has access to your photos, your text messages, your preferences. So it's not based. So you can use this AI could help you in your own personal life. What else did they reveal? They revealed semantic search, which means the whole spotlight search will be more, it will be better than what today it is like trying to, you need to have an exact a phrase of what you're looking for. It will become more in terms of what you are trying to search for, right, without having the exact words. So it'll become more semantic. Also, like this one was tap to cache. Right? You can have two iPhones each other to transfer funds from one account to another account, one Apple Pay to another Apple Pay. Updates to some, they also reveal some updates to messaging. What I like, this is scheduled messages. I always used to wonder, why don't we have a scheduled ones? Like on email, we have scheduled ones, because sometimes I remember something, but I don't want to send it immediately because maybe it's a off time and the other person might see a ping, etc. I want to send it at a particular time. But anyway, so Apple will have something called scheduled messages, and then they will also support the support for RCS, which is the next gen messaging standard. And that will, I guess this may have been driven by the regulators. So, and other one was messages via satellite. It's just like an Apple emergency SOS feature. When you have no signal, you will be given an option to find a satellite to relay the data. Again, you may call this, Apple call these as a revolutionary changes, but you may call this as a incremental improvements, right? But the AI will be the one which I feel is a big game changer if Apple can deliver to what I think that they are going towards. Then they revealed a new password app, right? In which it will store all your passwords. So that means there is no need of one password. The Apple kills one business with this one additional app. Other thing was smart script. I guess this is something which will be useful for me. It will be in your own handwriting, but it will make your own handwriting a little more legible. So I don't know, do you still call it as your own handwriting? It's not going to convert your handwriting into text, but it's going to maybe modify a little bit so that it is more legible. But you can, when you look at it, you still recognize that, yeah, I think it's written by me. That's called smart script. Intelligent writing tools, it can quickly proofread, rewrite, or change the tone. Right? I'm really angry, and then my boss asked me and give and send me a last minute assignment on Friday afternoon saying, "Hey, we gotta do this before Monday." I'm like, I want to really say, "Fuck off, man! I don't want to do this," but I really don't want to write it the same way. Hey, Apple, can you change the tone a little bit? And write a better message for me. So it could kill Grammarly with this. So that's another writing tools. Record from the phone app. So you can record your phone call. You don't need any other app for it. So you don't need the tape call, rip tape call. So with these new, I would say, OS, there are many businesses that just might be going to graveyard. What else? Instant calculator, right? So immediately give you answer. By the time you write down these problems on your iPad, you have your answers right in front of you. So I got this is really bad for those teachers who teach online. Kids will will start to use this and will have answers ready immediately. RIP Solver. So Solver is another company which actually does this. iPhone mirroring. You can put your iPhone right on your Mac and use any of the apps from our iPhone. And this will be available in the latest Mac OS called Sequoia. There used to be a company or product called Bezel. I don't know what's the need for Bezel now. More expressive, you can create your own emojis. Right? This is where you also get this whole generative AI. I don't know if they're using DALL-E from OpenAI to generate this, maybe, but you can create your own emojis and use it in instant messages. RIP Genmoji. Then they had a training load, which much more actionable data right from a fitness app. So another app called Whoop used to do it. So this is where some of these big companies some incremental improvements for these big companies is actually a 100% revenue for another small companies. So, and that is why nowadays it becomes really, really difficult when you're trying to invest in a companies. And I know many companies shares, right out of an IPO, they come out with much fanfare, but then you realize it is just one product company. How long, if this really becomes successful, how long before it could be disrupted by one of these biggies? So that's why I'm a little more hesitant to invest in a single product company. Confluent, MongoDBs of the world, etc. Hey, if there's only one product company, yeah, unless that's the product is like you have such a big moat around your business that no one else can do it, I'll be a little cautious, because these big companies can just add additional feature. A feature for these big companies is your whole company. So you gotta be careful. So that was on Apple WWDC. Did I miss anything? Did you find anything else? Again, I wasn't able to spend a lot of time because of my travels. All right, on to the last topic. Rajiv say Apple also announced private cloud compute, which is aiming to bring privacy model to their cloud, enabling AI on their user data. So I think that's, yeah, thank you. So that was a part of their AI announcement. Are they again trying to allay the concerns around privacy? Because I think the moment Apple talked about AI, everyone's antennas were, you're gonna send my private data to OpenAI? I don't trust OpenAI. So I guess that's where they try to allay this, saying we're gonna have a private cloud compute. So your data is not gonna travel to OpenAI. It will, whatever they're trying to create is it won't be exposed to others, I guess. I haven't gotten into that. I haven't looked into the details of any of this. So probably I'll go and read a lot more around how exactly is Apple gonna do this. But thank you. Yeah, they did talk about private cloud compute. Ramesh just says, still need to memorize math table when your phone battery goes down while shopping. Want to know the discounted price. I don't think anyone actually can. Yeah, no one does those calculations in mental math anymore. Okay, last topic of today, and then we'll call it a day. I have to travel again today. Reason is, and today is a good day. I have to travel for my elder daughter. Tomorrow is their graduation ceremony, the commencement ceremony. And that's why we have to travel today as a family. Pretty happy. I already told my kid, I'm like, you're not gonna get any fancy car for me as a graduation gift. My graduation gift for my kid would be, number one, you're graduating loan, any debt, you're graduating debt free. So which already puts you ahead of many, many other students. Zero debt out of college. Number two, 30K in your brokerage platform. Okay. So don't ask me for a fancy car. Go, kiddo, figure yourself out. Get your own fancy car when you're earning. And if you don't touch your brokerage account, don't mess with that account, you'll be millionaire by the time you retire. So from our family side, that's all you're gonna get. Hopefully, now rest is up to her how she wants to manage her life. But as a parent, that's all I can do. But that's what I'll tell my other kid also. We'll make sure you graduate debt free, and do this investment. Rest you figure it out. So so this is going to be for us. This is going to be the first college graduation in US. So yesterday I was trying to Google it. What do the parents wear in this graduation ceremony? So So we'll see. Pretty excited about it. Okay, the last topic. What a nice Father's Day gift. Yeah. Yeah. She graduated. Hopefully she doesn't come back and say, hey, Dad, support me. I mean, that's the gift that we're gonna get. A Vision Pro platform, Jignesh says, Vision Pro platform, could it be the next greatest thing for Apple? So spatial computing, I think my perspective is it will take time. But if anyone can do this right, it could be Apple. The today the whole Vision Pro form factor is not that attractive, right? I don't want to put those whole big goggles, and I know Apple has made it much better than what Quest from Meta is. Yeah. But I guess it'll still be a few years before it becomes hugely successful as let's say iPhone is. So is it going to become iPhone? Not in the current form factor. So I think the current form factor, its usage will still be limited to in your house for a particular task or for a particular duration of a time. Hey, I want to watch a movie. I'm going to put this Apple Vision Pro and watch it on a big 4K screen and all that stuff. Yeah. Or, hey, I'm going to go into my virtual office and going to do my work. And that means I'm in my office or whatever, my office space. I can put this on, get my virtual monitor to do my work. But then it's that but the usage is only for that specific task. So then once you remove it out, then you're back in the world. So I guess the form factor has to be a little more amenable for anyone to use it continuously, as like we use iPhone continuously, right? So prior to these smartphones, we'll only pick up the phone if phone rings. Now, we hardly use phone for actually communicating. We use phone for every other thing. So, but I think Vision Pro will take a lot more time before. And if it gets to the form factor, what Meta and Ray-Ban are trying to do it, yeah, then it could be the greatest thing. But like I said, if anyone can do it the best way, it could be Apple. Though Meta is actually right now, they are a little ahead with their Ray-Ban partnership. Yeah. But it obviously doesn't have all that feature functionality what Vision Pro has. So that will be my thought. I'm not gonna bet my Apple investment on a thesis that Vision Pro has to be successful. So if Vision Pro is not successful, I think I'm still okay. All right, last topic for today, and which is new valuation, or Tesla's new valuation, or I would say updated valuation model from ARK Invest. And if you know anything of ARK, you should know how to calibrate these price targets. Okay, so here's the expected 2029 price estimate is $2,600. Today, Tesla is at what, 200? Where is Tesla trading today? 185. From 185 to 2600. Again, this is like 5-year price target. Bear case is 2000. So we'll stick to bear case. So bear case is like $2,000 per share. Bull case is $3,100 per share. So that's the price target. Now, I think rather than the price target, the reason why I go through the report is, I mean, I have zero faith on these numbers. But the reason I go through the report is what goes in behind the calculation. What are the businesses that they are including in the price target? How are they coming up with this, right? So that's more important. ARK estimate that 90% of enterprise value and earnings will be attributed to robo-taxi business in 2029. So now this is an important information. So 90% of this valuation, let's say $1,800 of this from out of this $2,000 is if the robo-taxi dream becomes real. I want to remind you, Musk had promised 1 million robo-taxis by end of 2020. I don't see even one yet. Okay? But that is Elon Musk. That's how he has always been. Meanwhile, EVs could approximate quarter of total sales and 10% of earnings potential. And obviously robo-taxis will have a lot more higher margin, etc., etc. But that's the biggest factor behind this valuation is it means the autonomy has to be there. It means Tesla will be whatever level 5. By the way, if those who don't know, on the business on the robo-taxi is you own Tesla, you add Tesla, on your phone, you say, okay, I add Tesla to my robo-taxi network, and your Tesla will go out and pick up a passenger, drop them, and come back home and make money for you. So that's the end goal of robo-taxi is you don't have to drive, but it will bring down your cost of overall TCO of owning Tesla way down, because now Tesla is making money for you. And of course, Tesla will get some cut from there. So what are they looking at? So example outputs of bull and bear. One is cars sold in 2023, 1.8 million. Bearish case where we're looking at $2,000. What they are assuming is 5.8 million cars sold. I think that is feasible. $81 billion revenue to $51 billion, probably feasible. Autonomous, this is where the autonomy or ride hailing, $0 to $600 billion. That's something I'm still scratching my head, literally. Total gross margin, 18% to 56%. I think you can put any number over there because we have zero information on the margin profile because we don't even have, forget Tesla, we don't have any company that have got a full FSD, level 5 FSD, to even know what the margins would be. Today on Uber, what's the Uber margin profile? I don't remember, but let's look at what's the Uber margin profile. I'm looking because Uber is the other taxi company that we know of. Of course, it's not robo-taxi, so its margin profile is not going to be that attractive. But even if you look at, it's 5%. And let's look at operating margin. Operating margin is 2%, 3%. It's a low, taxi is a low margin business, but because you don't need drivers, yeah, maybe you can bump it up. 56%, we don't know, but this is what they have assumed. EBITDA margin 32%, enterprise to EBITDA, yeah, 16.8, $7 trillion company. Yeah. In the bearish case, in the bullish case, almost 11 trillion. And then in the expected case, it is like $9.6 trillion. $2,000 is a share price. Yeah. Of course, their assumption is that we believe Tesla will launch a robo-taxi service within the next 2 years. And that the probability that Tesla fails to launch in 5 years is de minimis. So do you think Tesla will have a robo-taxi out in 2 years? If not, then you can just ignore everything. or if you want to tone, you may want to recalibrate, you may want to calibrate your expectations based on now you know what has gone beyond in this valuation. Okay. So like they've run some simulations, Monte Carlo simulations to come out with these numbers. While unlikely, if we were to eliminate the possibility of robotaxi, our price target will be $350. I think this is reasonable. I can get behind this $350, which is accruing only from their car business. 2029 model considerations that are not the key drivers. Okay. Optimus, it is not the key driver in this pricing. Okay. So we expect Tesla to become leading manufacturer and service provider of robots that will move through the physical space. Okay. Our research suggests that generalizable humanoid robots represent $24 trillion global revenue opportunity. How many of you agree? $24 trillion. Today, the overall world economy is close to $100 trillion, maybe a little higher. So this is, I don't know what these analysts were smoking when they came up with these numbers. $24 trillion. Maybe it will gonna replace every human labor in manufacturing companies. Maybe in that case, it could be $24 trillion. Otherwise, I don't know. How would Optimus or the humanized robots will be a $24 trillion opportunity. So anyway, what still says, should it decide to sell Optimus externally, Tesla could capture a significant share of this multi-million-dollar market. So take it with a fistful of salt, not just pinch. Stationary energy storage, just say this is not included, which is I'm fine. Business opportunities that are not included in the model, but could accrue additional value to Tesla. Tesla Semi. So Elon did talk about it during its shareholder meeting that he approved a plan for ramping up Semi. So we should see Semis coming out soon. Supercharging network. And this is in fact true. Almost all EV companies in US have agreed to use Tesla supercharging network. So Tesla can basically create those adapters and first of all get a one-time revenue for selling those adapters. And of course, then as and when GMs and the Fords and the BMWs, they use Tesla supercharging network, then Tesla can also earn from supercharging network. Third is FSD licensing. A decision to license the FSD software to other automakers could be another source of revenue for Tesla. Fourth is AI as a service. Now this is where we start to compete against Googles and the Microsofts and the Metas of the world, in which, hey, Tesla is building its own AI platform. They got their dojo, and maybe they can provide it as a service to other companies. Moonshot. So these are, not only use the dojo for your internal AI work, which is for your self-driving, but other companies can use it to run, their businesses as well. So what ARK says is these are not even included in the model. These two, Optimus and Energy, are included, but they've considered minimal impact in their pricing. So all this pricing is based on robotaxi and EV. So you need to be really sure of what Elon is going to deliver on robotaxi if you want to get behind this $2,000 bear case and $2,600 expected pricing. How many of you agree? Again, don't go and buy shares of Tesla because we talked about $2,600 price target in this meeting. Okay. But how many do you think this is reasonable? I mean, let's forget about reasonable 2,600. $2,000 is a bearish case. Do you think that's $2,000 looks good? Today it is trading at 185. From 185 to $2,000. 350 sounds more reasonable to me as well. But they say 350 is anyway, it's going to get to 350 just because of their cars. No autonomy. Anyway, so you're not alone. If you are not alone, if you are cynical about this, of course I am cynical about all this stuff. Inflation adjusted in how many years? It's 2029. So we are looking at 5 years. Tesla. So ARK Invest generally gives 5 years target. Bet on 350 if lucky 2000. Don't know what they were smoking. Yeah, exactly. That's what, when I read them, like, oh, I don't know what the heck were these guys, how high these analysts could be for coming up with these price targets. So Chris Bloomstram, who is I guess a CIO of Semper Augustus, pretty, I mean, if you really, I think I talked about this guy. His annual letters are a CFA level letters. I mean, I couldn't even understand half of the things that he was talking about. He talks about in his annual letters, but a great follow. So immediately after I think the research director of ARKK had published a tweet around the Tesla price target, Chris followed up with his own tweet, right? And he didn't mince words. So I'm going to read through this, okay? Gross incompetence, fraudulent promotion. I hope as a CFO, you know Tasha. So Tasha is, she is the one who puts out these, she's the director of research who puts out these price targets. I hope as a CFA, which is, chartered financial analyst, you know, Tasha, that an investment recommendation must be made with a reasonable basis. Otherwise, you lose your charter for violating the standards of practice and code of ethics. A 7 to 10.9 trillion market cap range by 2029 makes ARKK perhaps the biggest charlatan of the modern era of fleecing retail investors. Apple, Microsoft, Nvidia are valued at only 9.6 trillion. That two combined. The whole S&P is valued at 44 trillion and 24 times forward earnings. Your 2029 4.1% free cash flow yield suggests 24 multiples to earnings for a car company, suggesting $450 billion in 2029 profits. Today's revenues are $95 billion. Wholly delusional, Batman. You couldn't help yourself by topping last year's ridiculous predictions by 25%, despite flat revenues and fast declining margins and profits. This one is doozy. Our research suggests that generalizable humanoid robots represent 24 trillion global revenue opportunity at scale. You do realize that the global GDP is just over 100 trillion. That Tesla insurance continues to make an appearance in your factually devoid analysis. Bring humor to the entire episode of the promotion of your book and the car company, suggesting the insurance business will be nearly as large as Progressive is today. Have you seen 40% operating losses on the so minuscule book of insurance that doesn't even merit mention in the company's financial statements? 3 years ago, you predicted a 40% operating profit in insurance. I guess you meant losses, which actually makes sense. Not sure why SEC enforcement director hasn't descended on ARK's office, or why CFA Institute is apparently disinterested in investigating a lack of reasonable basis in your research. But one thing remains. ARK surely does know how to put a spin on the promote while eviscerating retail investment capital. At least you guys have gotten rich with more than $400 million in management fees while losing literally tens of billions. Grifters gonna grift. I've never seen Chris being so angry in 80 tweets as much as he was on this Tesla's valuation. And I guess he's not to be blamed. Then I went back and looked at what ARKK predictions were. April 2023, the 2027 predictions was $2,000 per share. May 2021, its predictions were that in 2024, Tesla price would hit $7,000 per share or $1,400 adjusted for the split. So if this has to be true, we should see Tesla going up, what, 6 times, 7 times in next 6 months. But this is based on operating research. This is what they wrote in 2021 because they give a 4 or 5 year. So in 2020, they estimated that the share should be 1,400. And in 2025, the same share should be like next year, it should be $300. Okay. Sorry, so next year, it should be $3,000, not 300. So guys, I know this was a little more tongue-in-cheek, Tesla's price target, but this is why it is so important to do your own study. I mean, ARK holds a huge amount of Tesla shares. They don't want you to withdraw your funds from ARK, and they have to keep the interest. So is Tesla, are these AI and other Optimus gonna be generating additional revenue streams? Of course. But these price targets are ridiculous. So, and history shows that they have given ridiculous. I mean, she was right one time because of the COVID and all that stuff. That doesn't mean you're gonna get the same love from retail investors over and over again. So anyway, that's end of today's session. Have fun with this Tesla pricing. Sachin has made some comment. It will because not because of Tesla cars, but because of Dojo. What they are building is way ahead of anyone else at the moment. So and I know FSD and correct, but they are using Dojo for training their FSD, right? Whatever 12.x version of their FSD. And I have seen a lot of tweets around that their new version of FSD is way, way better than any, the prior version. Basically, you don't have to code it. It learns by watching the videos. So, and it is the experience of using the FSD 12 is far, far ahead of anyone else. That's what I say in tweet, but I don't know in reality, how much of this is true or not. We haven't really seen how closer are we to robotaxis. I mean, only companies that I've seen doing something on robotaxi actually on the ground is Waymo. And of course, Cruise are now scaled down the operations. But why is Tesla not starting their own fleet of taxi as a step one if they're so closer? That's a question I was thinking about it because I was listening to Elon Musk presentation or his speech in the shareholder meeting. And I was thinking, he's talking so highly about this FSD. Why not start a competitor or a competing service to Waymo and prove it? So I don't know. That's just my skeptical mind. I'm a Tesla shareholder. became a shareholder last year because I found the valuation to be okay. And I'm not gonna sell my shares, but I'm not gonna be a shareholder assuming that is gonna be $2,000 a share in 2029. I would rather probably have a much I will temper down my expectations around it. I'm not going to hold it because it's going to be a $2,000 share. But I'm excited, will be excited to see what FSD or robotaxi could actually do it. And will this be a big business for Tesla or not? Only time will tell. I mean, when it comes to robotaxis and all that stuff, a lot of FSD is one part. The other big part is the insurance. How will all that stuff work out? And yeah, Tesla is getting into insurance business also. How about the regulators? Who's gonna be held responsible? A lot of stuff that still need to be sorted out, which is outside of Tesla's control. So we'll see. But some fun valuation always when you're looking at ARK's predictions, temporary down, temporary down. So their predictions about everything, talk about Bitcoin or anything else, they're always way off the charts. They're thought-provoking predictions, I would say. FSD 99 per month. Yeah, that's what they are. It's not FSD, it is supervised FSD. Let's make it clear. Whatever Tesla is selling you today is not full self-driving. They can't legally claim it to be full self-driving. It may be, I don't know, it's called supervised driving. It is not self-driving. It has to be supervised by a human. And that, if you really want to have a robotaxi, it can't be supervised. So you're sitting at home and car has to go out and earn revenue. So is it going to happen in next 2 years? We'll see. Elon is gonna announce what, August 8th, right? Some announcement around maybe around robotaxi or maybe around $25,000 car. We'll see. But so the next, I guess, next stop on Tesla journey will be August 8th. We'll see what Elon has to reveal around robotaxi. And if robotaxis, it becomes a reality, yeah, maybe then we will achieve $2,000. But I'm not gonna back up the truck on $2,000 price target right now. Okay. All right. With that, this is the end of today's session. Thank you everyone for joining in. Sorry, wasn't organized as much. I am generally on these sessions. Travels made me crazy. And again, we are heading out today. So no meeting this Wednesday, but we're gonna meet on Saturday again on 22nd. All right, cool. Thank you for joining. We'll talk again next Saturday. Have a nice, profitable week. Hopefully, markets will do what market will do. Thank you very much, Ignesh. Yeah, we all are excited as a family. First kid graduating. So, yes. I'll see you next Saturday, guys. Bye-bye.